Hello everybody, this is another episode of But It's Smooth Crypto, and on today's lesson we'll be talking about the people's favorite choice right now, Shiba Inu. That's literally what everybody wants to talk about. People been asking about it, so we're gonna apply some of the lessons that we've been given on the crypto lesson series, and we're gonna get into Shiba Inu. We're gonna start analyzing it and seeing where the price is gonna go. So for now, I'll just give it away to the Crypto King. But before that, please make sure you subscribe to the channel. If you do, you'll be entered to win $1,000 once we reach 1,000 YouTube subscribers. So please make sure you subscribe, like the video, comment down below, especially if you have questions. We always we write down the questions and answer them for future episodes. So please make sure if you have any questions, this is why we're here, to help you answer those questions. Take it away, Crypto King.
Okay, so looking at Shiba, we're on the 1 week time frame with the data coming from Coinbase. Shiba hasn't been on Coinbase for very long. September 6th was the first weekly candle on Coinbase. So just let's zoom in and look at it, see what we have. So right off the bat, just look at that downward trend. That's just, this is the third week of a downward trend with a lower wick forming. That has formed on this weekly time frame, at least. So that just shows that, the trend is down. It's downward pressure. So, on the weekly time frame, we could plot a fib. We could go from swing high right here at the very top. We'll go to the swing low, which is here the very next month, November 1st. Oh, I guess the current month is really the swing low here in November. Let's do that. Okay, so we have our Fibonacci drawn. Let's just look at that. Let's see how it's played out. So you could see our 61.8 level has acted as resistance before getting shot back down. And now we found a little bit of support at the low, that's really where we drew it. So from here, we could go ahead.
Yeah, so now you think there's a opportunity for it to bounce back? Or do you think it's going to play out a little more?
So, good question. Let's go to the daily, since there's not very much price action on the Coinbase chart. We'll zoom out, excuse me, make it a little bit bigger, and we could just look at it. Look at these. The breakout hasn't been retested. So this level has not been retested since it's broke out. So that seems where price would want to go to retest where, before price broke out. But really, if we want to stay bullish, we could look at these wicks here. These wicks always get fulfilled. That's the name of the game. So I would look at this wick here on November 1st. We want to click the top, go to the bottom of the wick and just drag it out. So we want the rectangle tool drawn from the top of the November 1st wick to the bottom of the wick. So top of the candle body to the top of the candle wick, and just extend it out. Wicks always get fulfilled. So if you want to stay bullish on Shiba, then you would expect price to come back into these levels of the 1, 2, 3, 4 zeros and a 7 to 4 zeros and 7.5. So, if you want to be bullish, that's where it could potentially go. And if it goes to those levels, then it's more than likely going to go here to the lucky 3-digit 7 here at the 236 level.
Nice.
So we have our resistance, which we will make red. Okay, let's make it all red. Okay, so now support. Where do we have support at? Below where we currently are. Let's zoom out a little bit and look at that. So what I said about wicks getting fulfilled is look at the wick here, October 7th. Look at that wick. That was filled with that candle body. So let's just zoom into that section a little bit. Get our rectangle tool. So we're here October 11th, top of the candle body, top of the wick, and we'll extend it out. Now I can't see it. Okay, So we have that. So back here, when that was creating an all-time high, we had that wick that formed here on October 11th. Before it really truly broke out, it filled that, you see here, and then it retested it before it kept staying on its rocket ship. Right, it's going to a different planet completely with that.
That one
with that movement. So that's
that was blast off.
Right. That's why I'm looking here. So expect if we come in and fill this level for Shiba, expect the same thing to happen that happened here. Because what's happened in the past gives you what to expect to happen in the future. So always, wicks always get filled. We could go back whenever you want. Look at this wick right here.
Yeah.
September 16th. I'm going to draw it just to get the point across. Top of the wick, bottom of the candle body, extend it out.
Oh,
let's just draw that. Look what happened.
That was like the perfect sample. Look at that.
Fully. So
that's a foreshadow. The wick is a foreshadow of the price.
You could expect it. So, I mean, don't get me wrong. All these weeks of holding, if you bought up here, all these weeks of holding, man, you would be upset. You would be depressed. You'd be pissed off.
Mentally.
And then boom, the wick gets fulfilled. Wicks always get fulfilled. It pumped up, came back to retest before it went to the moon. Same thing here. Wick, boom, multiple weeks. Oh, this is the daily time frame. I thought this was the weekly. Multiple days, probably about a week and a half there before it pumped through. It fulfilled the wick. Came back and retested it before it went to, Jupiter. And then here, expect the same thing. This wick does need to be fulfilled. So,
But then remember, the bottom one needs to be fulfilled as well.
Exactly. I mean, this has already been filled right here. This is more so support now. So if we do come back down, we know where we could potentially find support if and when we get a huge market correction.
Okay, I see what you're saying.
So we have our levels here. We have our support down here. We have our resistance up top. We have our Fibonacci. And really, we could add some trend lines now. So let's add some trend lines right here from November 4th of this year. We'll start it there. We could either use November 5th as our second touch point or November 10th as our second touch point. Let's just look at it. So there we have November 10th as our second touch point. I mean, it's acted as a little bit of, support and resistance. If you line it up just right. So first touch point, November 4th, second touch point, November 10th. We broke below it. And then now we retested it as resistance, November 19th. So I mean, I like that trend line, but if you want to be aggressive, you could plot it from that second touch point here, which is November 5th. Let's look at it. Second touch point right there, November 5th, extended out. So if price starts, really turning up, where we could catch some resistance on that trend line. But again, just to be a little more conservative, I do like that second touch point right here. Second touch point, November 10th, because it did get rejected on November 19th here. That just validates it a little bit more for me. And then if you're looking at a trend line from over the top, we could use here the November 5th candle, that same candle. The top second touch point, I would look here, November 11th. Let's see how that looks. Okay, it's not bad. Not bad. Let's look at our second touch point. If we draw it, second touch point, November 14th. Okay, this trend line could be coming into play a little bit more. So, I mean, really, this is live action, how I trade. These are the three tools that I use, the Fibonacci.
How would you start, what could give you a time frame of when the wick could feel? Is there a way to tell slightly, like you have an idea, this might take a week, this might take a month?
So, I mean, you could go back and just look at the past.
Okay.
So let's do that. So, I mean, is there a specific time frame, like, okay, this wick filled and I know in 14 days that the wick will be filled.
Okay.
No, there's not a specific set time frame. But I mean, this is cryptocurrency. This is technical analysis. We have measuring tools. So if you want to give yourself the edge, that's a great question. So here, November 16th, we'll start it. And then it was filled here on October 4th, which if we look here, 18 bars. We're on the daily time frame, so 18 days. So that one took 18 days. Let's get the measuring tool out again. We drew it here where the wick to candle, top of the candle body to wick on October 11th. Let's draw it out. When it was filled, we had 12 days. Okay. So let's see where we are now. So let's see how many days out we are. So we drew it here, November 1st. And so it's currently been 20 days. So, I mean, if this is going to play out, it's going to play out soon because these happened relatively quickly. Oh, excuse me. These happen relatively quickly if you look at them.
Because that's within days.
Exactly, for the wick being filled. So, again, if you're going to trade this, you would expect that to come through relatively quickly, but you would still have it extended out because, you know, if price comes down here to the support level, if it comes down here to where we started the Fibonacci, we know where price is potentially going to go. So we would have orders stacked down here, maybe towards this level of support if you want to play super conservative, have a great risk to reward setup. And let's, just see, you would buy down here, then you would have your sell orders here where the wick needs to be fulfilled. And if we do that, we could look at the risk and reward for a long position for down here at the support. Let's do it at the top of support. We would take profit at the top of the wick being fulfilled, and our stop loss would be down here at the top of the prior wick. So if you look how everything plays into part, our stop loss would be the top of this wick from September 16th. Our entry point is potentially where this wick occurred to be fulfilled. And our take profit would be up here where this wick was, where this wick needs to be fulfilled. So if you look at that, that's a 3 to 7 risk to reward ratio. That's an amazing setup. It doesn't really get much better than that.
So you basically, this is the prices. So if you guys look on the right, you can see the prices that he's pointing out right now. This is not financial advice, but just look at where the prices are at.
Exactly. And this is just, we're literally just using the drawing tools. We're not using any lagging indicators, any RSI, nothing like that.
Well, what would you consider lagging indicators?
Everything that's not a drawing tool.
Okay.
Everything that's not a drawing tool.
Are we talking like volume?
I mean, volume's good to look at. Volume is good to know. But I mean, if you're looking at, moving averages, RSI, Bollinger Bands, anything, any indicator here, anything in here, in my opinion, is a lagging indicator. Anything.
So when did you learn that we're lagging? How long did it take you to go through them and start noticing that, well, this is very late. This is did not predict any price action at all.
Well, I mean, that's a good question. It was relatively early on in my trading career, but I feel to truly answer that question, that is a great podcast question. So you guys tune in for the next podcast.
Oh yeah, there we go, guys. But so anyways, guys, we gave the people what they wanted. They wanted to know what Shiba price action will be, and you guys have the chart right here in front of your face. Pause the screen. You want to write down the numbers? Go ahead. This is on you. If you lose your money, that's on you. Okay, guys, have a good weekend. Good rest of your day. We'll see you guys soon. Oh, make sure you subscribe. Bye, guys.